if you see that price has not made a lower low, but pressure has, there's possibility that it's building pressure to go up because price is not, that pressure is not pushing price down. But the radar for pressure is showing that it's down. So therefore, you're probably going to get a reversal up, going back up, because price is still holding trend. It's not making lower lows on price. It's just pressure. So that's usually pressure just building up to take it back up, even though you got the information. What also you could tell is you got your 50% line, pressure's below the 50% line. So therefore, when we're below 50% or near the 30, we're looking for buys anyway. And if you look at price, we're looking for buys. Why? Because price is still showing uptrend and pressure's building up for uptrend. Now, if you vice versa that, then that would be price is low, but pressure's up. And if you see pressure going up, but price is not getting lower, then therefore it's building pressure to make the downward move. So there's, that's our trend. Price still hasn't broke the low, but we see that pressure is. So therefore, that pressure is not moving price. Pressure that's there is not moving price down strong. So it's still buying. Buy area or bullish area is between 70 and 50. Sell area is between, let's say bought area is between 70 and 50, and sold area is between 50 and 30. Right? Outside of those, outside of 70 is overbought, and outside of 30, meaning below it, is considered oversold. You're really looking for good buy structure and oversold structure on RSI to get your buys. When you get overbought structure on your RSI, but you're getting sell structure on your pricing, then you're looking for sells. Now, if we're in the buy area and we see price starts to sell, but it's not coming outside the buy area, that means we're still looking for buys. But we don't want to buy when it's overbought. We want to buy when it's within the 70 and 30 area of RSI, because that means it's still holding buy pressure, it's not holding sell pressure, and we're just looking for the proper structure to get it back to overbought if we're doing buys, if we're above the red line here at the 50% mark.
Blue engulfed
the white.
White.
And then here, the white engulfed the blue. What happened here?
It went up.
But it failed to do what? Engulf it.
Engulf it.
That's how you understand engulf candles. Right here, how it looks on the monthly, right? So we know right here in this area, price went up and then halted here. So this was a prior supply area. Came back down, the run was in between here. Then it started to shizzle that way, right? So then we know that's a demand area, right? Yeah. Hold on a second. Demand. Oh, sure. Got settings set up. Hold on. Let me write it in. Demand. Right? This is demand. And up here is supply. Because supply is at the top, demand is at the bottom. All right? And this is on the monthly. Then we come back up, and if I was to stretch this out, we would say, oh, okay, that falls into supply as well, right? So, just gonna clone that right quick. Let me take that, drag it over here, and say, now it's up to you, and depending on how you trade, whether you use your supply and demand zones at the top of the wick or at the bottom of the wick, or if you want to do it something like you focus on the close Me, I like to focus on where it closes at mostly, like where it bounces and closes and go the other direction. So that's the high of it, and then that's the low of it, close-wise. So with gold, we see that on the monthly, came up, broke through the supply, made a high from the last supply. In that supply, came up, came down, stayed in the supply zone. So if I was to naturally look at this, I would say that, okay, gold is at a high point of its supply area. So what I'm looking for is, all right, in the next coming month, is it going to break out and go up, or is it gonna stay within the supply zone and come back down to the bottom of the supply zone? That's what I look at. So now that I know, all right, came up, it wicked out, came back down, held in the supply zone and made a low, came back up and made a even high, and then behind that came a tweezer top. That's usually a signal for price is not, going up anymore. It's probably going to want to come back down in the following month. That's a prediction. That's just you saying, okay, it's not coming out of a certain zone. Now, this week, we know we brought, or in this month, it's buying up, right? So, as of right now, it's buying up in this month. So now we know that we're in a supply area and not a demand area. We may look for sells because it's at the top of the supply, it didn't break out, and it's not in a demand area where it's more so at a bottom area of a full move. So that's one understanding that we have to look at. What is the structure? The structure showed the engulfing, then it came up and made almost a tweezer top. So in my eyes, what I'm looking at, I'm thinking, okay, there's some heavy rejection up at this price area. It continues to not be able to break that. But there's also some support in this on this bottom area because it hasn't broken that. Now, is the support stronger than the resistance? I would say no, and the reason why I would say no is because this high matched up, which can give us a formation of an M, and this low was broke by this low. So my chances of, if I do see a sell signal that breaks outside of the low here, I could probably sell it down to this low or into this neck area, which I call like the neck area, where it bounced here, came, wicked off here, wicked off again there. When it came there, wicked off. When it went below it wicked off of there, and then it broke through. So I will also assume that this is a good neckline for price to come revisit, because they tend to push it away from there, right? So that's on the big scheme. All right. Now, within this candle, I'm going to look at, which I would drop down to, let's say, the weekly, just to see what kind of structure the weekly's making. Why is my line not showing? Let me go back. My settings is probably off. Settings, visibility. Yeah, that's what it was. Turn these off. All right. So now I'm going to look within this candle to see what's going on. All right. So 4 weeks in a month. We're in the second week. So this is the first week. This is the second week. We're in the second week of this monthly candle. So now I notice on the weekly, I got engulfing. So pressure is still bullish. And that makes sense because I'm trending like this. And to make it simple for you, sometimes you can do it like that. And look like, okay, this is what prices is bouncing at. All right, on my weekly, I may come in, look at this and say, all right, boom, there was a bounce here. Let me see if that's something that's strong. I'll take a line, put it there on that level, go back in history and say, oh, there, that's a bounce. It likes to make actions around there. So off the rip, whenever I'm making a trade, I like this area. you may want to label it, you know, whatever you want, like good reaction level. Boom. Go back to the candle structure and say, all right, I got extended morning star. It's extended because long candle, 2 short candles or indecisive candles, and then another long candle. And it's the upside down U, so that's a evening star, right? A lot of times, evening stars like to get tested to see if they actually have the proper strength. So I would like to expect that price comes at least into this area here to find out if it's going to reject. Now, we know we made our trend line. It's within our trend line. This is an area where the morning star started. It may want to retest that area, and then we may see a different type of action or continuation on the up. All right? So that's on the big scale. All right. Boom. That's what we're doing within. That's what it's been doing weekly wise. We're seeing what the structure is. We had W here. Boom, boom, boom. Took off. Right? When it got there, it made an evening star. Now, good level, which is the neckline. And as we put it, you know, in candle form, we can see, yeah, that's valid. It's a lot of choppiness here. This is where it makes a decision. I bet. What else I want to look at? Well, what's the downtrend look like? Is there a downtrend? There is slight of a downtrend because we got a high and a high, a lower high. And there's also liquidity up here. So sometimes I may want to say, all right, let me make sure I know that the liquidity top is here on the weekly. Oh, I used the wrong, that's the wrong, where's my liquidity? I don't feel like laying with it, but I know that that's the significant high. That's what price rejected very hard. So sometimes I take the analysis of saying, let me get the measurement, and this is the date to time tool I'm about to use, of what's 50% of that wick. Okay, I'm always gonna note that 50% of the wick is likely to at least present itself, coming up and presenting itself at 50% of this wick and rejecting, because then it will give us, on a bigger time frame, a lower high to say that it's staying in the range that we see, and this is called the range. When you see prices just going sideways and not breaking out, this is a range. That your supply and your demand area are usually range areas, right? And a range just means it's going sideways. So we know that. We know, all right, that's 50% of the liquidity. We got the trend up. Let's see what the trend down is. I like to go from close to close. Bang. So what that just did for me on a weekly standpoint showed me what the squeeze room is. The trend staying like this, it's squeezing within this. You see, we're getting closer to squeezing and breaking out of a downtrend or breaking out of an uptrend. A lot of times you'll see the move outside of this trend line. So once it, let's say if it came up, where's my tool? Dang it, it's not up here. I'll show you. Where is the? Let's see. Go ahead. So let's say it may come up, do something like that, then come down. Just an example, come up and then squeeze out. Then we know we got a downtrend. And what does that look like? An inflammation, right? All right. It could happen that way. Let me get rid of that. Or it can happen where comes up, comes down, then it wants to come out, make a higher high or test the actual high, come down and hold its balance on the outside of that downtrend, and then come up. Oh, shoot, I'm messing up. Sorry. Up, down, outside the downtrend, boom, and then come look for liquidity, right? And when we do that, we see in formation form, but break and then form its W formation outside of the trend. So you do that to say what's your, it's like predicting what a play might be in a game. Like, all right, it can go this way or it can go that way. Now I know what that may look like. Now, it's never ever that perfect. You know, the trend line may leak out, you know, it may come out of the trend line a little bit and then make the trend line like out here, which is, gives you indication, okay, it's still making decisions within this range right here. So now that you know that, all right, I got a bullish engulfment, that's a strong indicator that price is going to continue up for whatever duration, right? And then I zoom out and I try to see, is there any type of other shapes forming? You know, it could be a possible W here. We know this is a good level, and then make a W formation in that fashion, right? You just draw all it out so you can see what your different possibilities could be. Now what I do, I'll sometimes look at RSI, like, okay, well, RSI is in a buy range, right? It's above the 50% mark of the RSI, so it's still in a bullish area. But it did come up and top out here and bounced back down and held on the 50%. It's not, I'll get into that later. So right now, we're still looking at it possibly staying bullish. We got a bullish indication here, smaller black bear candle with a bigger bull candle. It came down, retested this whole candle, and then rejected and gave us a hammerhead almost, as of right now. Now, as we discussed yesterday, if it closes like this, that's a what? Now, I know we did white on my screen, but you know, black is bear, blue is bull. What kind of candle is this right here? Our black is bear and our blue is bull. It's buy. Exactly. What kind of candle is it right now?
The bull right now.
Bull what?
Bull hammer.
It's a bear hammer. It's a but what kind of candle? I forgot we broke it down like that. We know what kind of structure it is. It's a hammer, but what kind of candle is it though? Black is bear.
Bear. Yeah.
So therefore, it's giving us a mixed signal right now. Because you know what I mean, it's giving some mixed signal. So even off of that, right, when you get experience, you can say right now, this area is somewhat indecisive. So I'm gonna go with what the last movement was, which is a bull candle, right? I'm gonna say that price is still bullish because right now it's indecisive because it's giving me a hammer look, but it's actually a bear candle. So it's like, okay, which way is it go? So I will keep the analysis as of right now that it's bull because my last structure was a bullish engulfment.
Okay, so let me understand that. Okay, so that's a hammer.
It's a hammer.
A hammer, but you're saying that it's a bear.
Yeah. So it's because it's black.
You see on here, I got the bull black.
Right, because we was on the other joint. That's why I'm trying to tell you on my screen here, my bear candles are black, and my bull just because my coloration is different up here.
Okay.
So that's why I had to tell you as far as I know you wrote it the other way, but on my screen here, my bears are black.
Okay.
So it's just basically saying whatever color scheme you got, what kind of candle is it? Right now, it's a bear candle.
Okay.
Because price is coming down.
Okay.
As far as on the weekly, but it being a hammer, it's like, okay, well, hammers, this type of hammer with the wick on the lower end is a bull structure. So it's giving me a bear candle with a bull structure. All right, that's two mixed signals that don't add up. So let me go back to the last candle. It was bullish and it was engulfing. So the momentum is still bullish off of that, right? So let's go ahead and just so we can see it on the next time frame. Let's highlight these 3 candles so we know where we at. Let's go down to the daily. Now on the daily, what structure do we have? Now it shows why this instrument is still bullish, because when we break it down now coming off the weekly, we don't even need this line no more. We're off the weekly, I have a formation of a W here. Right? Drawing that out first. So, all right, cool. What candle structure do I have as it's making this W? Well, let's look for our last bullish signal. This is a possible what? Let me look at this.
Okay.
What we went over?
Oh, this is a U.
This is a U. So we got an evening star.
Right.
Right? Let's mark up our evening star right quick on this daily. First, I want to find the neck.
Okay, so we got an evening star from the top.
I'm sorry, morning star.
Right, morning. Okay.
Ah, there you go. There you go.
Yeah.
Catch me. This the neck because I usually go off of what price went to in the center of that morning star, basically the doji. So here is where it broke out and made a high off of the doji, right? And when I go back and I draw this and I pull this line back, I also see it's all repetitive stuff. Is price bounces at that neckline, right? So in that W formation, it came up. Here it didn't give no bullish indication. Went up, gave a bullish indication here, which it's a doji, and an engulfing after it. Came down, didn't make a downward or bear engulfing. Then it came and drew up this morning star. All right. The first leg of the morning star forming didn't break this full move down. It's just now getting there. So if it closes, if it closes up here, that morning star is solid, right? Bet. What's missing is I didn't get a confirmation of it retesting to see if it wants to make this morning star legit. Also, I want to see price. I know I'm in the winnings when price breaks this high, because then I'll have a higher high. And what I'm looking for after that is to come up here and grab this high after that, which is the liquidity mark. Because why do I call liquidity? Because price kept wicking off of this level. So there's a lot of decisions going on at this level. When I match it to that level, I go back in history, I see, okay, it did it once before. So my prediction would be that I can expect price to come up here at some point in time. Also, my prediction is I can expect price to come down here and test the morning star that I created, and or possibly give me a triple bottom, which makes it even stronger for it to be a bullish movement. You grasping everything so far? So this is how I'm mapping my joint without even checking out the RSI so far. So, all right, I got my key levels where price can go to and bounce at. Now, I will color code it and label it like I would say neckline. I would color code this as a neckline. Let me see if I got my joint messed up. Let me do it this way. Get rid of this because I got stuff that's pre-labeled. Price makes a decision at this joint. It made the bullish formation at that level. And there's the neckline. I got it. My settings is off. That's not true. I'll just write it in. Settings. Neck. Alright, there we go. So now I got my neckline there. And I'll change the color of it just so I can know where it's at. So now I'm thinking, alright, on this bigger time frame, what's a nice, and we on a daily, what's a nice entry to get on, or where price action happens at where I may want to get in at. I may want to get in up here if I see another bullish price action off of this line because it broke the high, then most likely I'm going to get a push up and a retest, and then that's a higher higher low, and I may want to get in there. Or I could say, if I see a rejection here, and then now I want to look in this area where the neckline is at and see if I get a reaction that gives me bullish pressure as well. So those are 2 points where you could say, I may want to enter at these 2 points, right? On a daily scheme. So remember we talked about, you know, those long runs or short runs type of trades. This is more of an intraday setup for a trade. When you're measuring on a daily, for price to go to a line on a daily level, it's an intraday trade. It's going to take probably more than a day for it to get to that area and make a decision.
So that neckline again is where? I mean, like,
The green one.
okay, yeah. But what makes it a neckline?
Because price came down, made the formation below it, came up to an area, came back down, and then made another price action. So this is the middle of the price action. Price turned up and price turned up here. And why I specifically made it a neckline is because I had a evening star form. So the middle of my star, what is the high of that? So what is the high of that? Is here.
The neckline.
Where that wick is at.
Yeah.
So boom, I take a line and I put it there, and I go back to see if that is valid. Does price react right there? And I noticed that a hammer came here and reacted off of it. When this candle came, it made a doji, indecisive candle, and then rejected off of that. Then it came, broke straight through, and retested that again. It keeps testing that area for some reason. That's a neckline for me.
Gotcha.
You know what I mean? A lot of traders are making an action there.
And I'm glad you said that because with the video, I want people to know the difference between a neckline and a U-line. And then why is it like, you know, the reasons it's close, but, you know, give you a reason. That was a great analogy.
Right. So they usually say this is the tie of the neck. You got the head, then you got the neck, and then the body. And then sometimes it flips. Like this way, it was the neck because this was the head, and it came down, made the body, and that became the neck. You know what I'm saying? So I'm gonna get rid of these. Make them smaller. When we go to a small time frame, it's gonna look a little big.